Bob Pisani, who would normally be on the floor, but we're all trying to work out our future teamwork and logistics, and he's joining us remotely as well. Morning, Bob.
And who would have thought that I'd be here in my home rather than down on the floor of the New York Stock Exchange? You know, the New York Stock Exchange floor closing is really a microcosm of what's going on around the country. The NYSE is essentially like a giant mall that's got restaurants and stores in it, and the restaurants and stores are essentially the floor brokers and the designated market makers that are out there. So you can say we're going to close it and reopen this giant mall 2 months from now, but the question is, are all the restaurants and all the shops going to be able to efficiently open 2 months from now? And that was one of the concerns that existed about closing the NYSE. And of course, they did make the right decision as soon as there were any positive coronavirus cases. Let's look at the sectors this morning here. A little bit of bifurcation, but not dramatic here. Healthcare, consumer staples, also down, not as much as banks and industrials. Energy was briefly positive, and once again, they press it. They have just been pressing any rally in energy for the last several weeks. I want to show the broader markets, which caused so much distress yesterday to traders. Most traders, I have on top. The first thing I have is the S&P 500. The second thing that I have is the bond market, LQD, and that was a little weaker yesterday. Continues to be weak today. Oil up, 18-year low up today, but down big yesterday. Gold fractionally on the upside as well. So that's not as bad as it was yesterday, but there was a lot of distress when everything was down dramatically. At least today, oil, you see, is on the upside here. They were talking about Mr. Kudlow and talking about maybe buying equity stakes. This has got Wall Street in a tizzy. People are remembering what happened with some of the bailouts where the equity got wiped out. And so it's a problem. Boeing's down another 9% today. The airline's still having problems here, and I think this is a real overhang. So they've got to clarify this. Are we just talking about government loans, 20 billion, 40 billion, whatever to Boeing? Or are we talking about loans that convert to equity in some way? If it's a loan to convert to equity, Wall Street's going to have a very, very different viewpoint because of what happened in the 2008 financial crisis. I want to remind people about where we are right now, and we keep saying, well, the S&P is 30% off its highs, and it is, but you want to look at the broader market. While most everything else is roughly around there in the major indices, the Russell has gotten clobbered, and I don't think we've been emphasizing that up. The Russell 2000 down 42% from its high. So it's suffered. Small caps here in the United States, small businesses have suffered much more than the larger businesses. I think that's a key point here. Finally, a little shout out to Nick Colas over at DataTrek, who pointed out some of the disparities in the way these indexes are constructed. They are market cap weighted indexes. The S&P Tech Index is only 18% off its high. But remember, the S&P Tech Index is 41% Microsoft and Apple, 21% Microsoft, 20% Apple. So essentially, because Microsoft and Apple aren't down as much, Microsoft's only down 11, Apple's down 16, the rest of the stocks in this, which are the majority, of course, are really suffering. They're down a lot more. So Micron's down 35, IBM, you just had Genon, 23%, and Lam Research, all of the semiconductors down a lot more. So this goes back to what I call the politics of index construction. You got to know what's in them. And of course, Carl, there's a lot of these ETFs out there that don't weight these companies by market cap. They weight them by other factors, equal weight. Some of them weight them by quality. Some of them weight them by earnings. And maybe that's another way to look at that, because obviously you're going to get a very different result here if you weight them other than market capitalization.